Good morning and welcome to the ADS Securities Markets Update. The US dollar weakened across the board yesterday following the ECB decision, in addition to some key economic releases which came in also with mixed outcomes. But beginning with the ECB decision, the bank kept the current policy unchanged as widely expected, while Mario Draghi showed a balanced statement, leading to another spike in the European bond yields and also the euro. Moreover, Draghi noted that he is confident about a potential deal with Greece in the next few hours or in the next few days. In addition, the ECB also left the inflation estimates unchanged for the next 2 years, and the bank also believes that the GDP for the euro area will be around 1.5% this year, which is also the same estimate for the last meeting. And this is the reason behind the euro rally yesterday, in addition to the bond yield as well, and as the market was waiting for another dovish tone from Draghi after the recent rally in the European bond yields. But as for the US figures yesterday, there were four economic releases, two of which came in with a positive and solid outcomes, while the others showed some more disappointing data. First of all, the ADP non-farm employment change added more than 201,000 new jobs in May, compared to 165,000 in new jobs in April, which also seen as a sign that the US jobs report on Friday may come in also with a positive outcome. The trade balance deficit also in the US narrowed significantly by 19%, declining toward $40.9 billion in April, compared to minus $50.6 billion also in March, and this is because of a falling imports. However, the final services PMI for market has been revised lower toward 56.2, down from 56.4, what had been anticipated to rise toward 56.5. And finally, the ISM Non-Manufacturing PMI also came in shockingly weaker, declining toward 55.7 in May, down from 57.8 in April, while it had been anticipated to decline toward 57.1 only, and this is the lowest reading since April of last year. Despite the positive ADP, the positive ADP and the U.S. trade deficit data, the U.S. dollar also couldn't stabilize yesterday, and the dollar index lost more than 1.34%. As we noted before, the choppy range is likely to continue ahead of the U.S. jobs report on Friday, in addition to the Federal Reserve decision later this month. But from the technical analysis point of view, the outlook remains bearish, as we noted before, as far as the index or the dollar index stays below 98.50. As for the Asian session today, there were only two economic releases from Australia which had a notable impact on the Aussie. First of all, the retail sales came in also with another disappointment, showing no change or no growth in April after rising by 0.2% in March, while it had been anticipated to rise by 0.4%, and this is the weakest reading since July of last year. Moreover, the trade balance deficit also widened significantly toward minus 3.89 billion Australian dollar in April, compared to minus 1.23 billion in March, and this is the highest trade deficit since 2008. As a result of the Aussie declined across the board yesterday. The Aussie dollar eased back from yesterday's high. Yesterday we noted that the Aussie is facing a significant level at 78.04, which represents 61.8 retracement from the recent decline. Yesterday the pair also couldn't break above that level and eased back again towards 77.20, as we noted in our yesterday's yesterday's report. But as for today, the pair already retraced by 50% from the recent rally from June 1st lows toward yesterday's high, and the key support for today stands at 76.83, which also should be watched very carefully, as a stabilization above that support may grant another rally above yesterday's high, and the catalyst for such move might be from the U.S. economic releases later today. As for the European session ahead, there is no economic releases across this session, while we wait for the Bank of England decision today, which is expected to keep the official bank rate on hold at 0.5% and the asset purchases facility at £375 billion. Going forward to the US session, a few economic figures also will be released today, which may have also a notable impact. Beginning with the jobless claims, the estimates are to decline slightly toward 280,000 last week, down from 282,000 the week before. The Challenger jobs cut also will be released today at around 11:30 GMT time, with no future estimates. And finally, the revised non-farm productivity will be released today, and the estimates are to be revised to a decline of 2.8% instead of a decline of minus 1.9%. In Canada, finally, the manufacturing PMI is expected to decline again toward 55.1, down from 58.2, which would be the lowest reading in almost 2 months. Looking quickly at the euro today, or look at the technical side of view for the euro, and after yesterday breakout above 1.12 resistance area, another rally could be seen in the next few hours toward 1.13, and this is if the euro managed to stabilize well above 1.20 during the European session this morning. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching. I'll see you once again tomorrow.